Hello.
So, yes, good morning everyone. Thank you all for being here today. And I'm actually very excited to be the moderator of this discussion because the people who are going to be joining me on stage are experts in their fields, and it's a very exciting topic. It's about the technology that could be like shaping how we will be doing things in the future and how it's going to be like maybe our mobile phones are going to be affecting the way we do even the smallest things in our daily lives. So, without further ado, let me introduce our panelists to everyone. First is Ms. Karen Batungbakal, Chairman of Global In-House Center Council. Hi, Karen. Next, we have Mr. Edwin Bautista, President of Unionbank. Next, we have Mr. Zdenek Jankovsky, CFO of Home Credit Philippines. Next, we have Mr. Xavier Marzan, founder and president of TrueMoney Philippines. And finally, we have Mr. Anthony Thomas, CEO of Mynt. Yeah, all right. So good morning, everyone. Thank you. So, just going around the table, let's begin with Zdenek. All right. So I hope I'm saying your name right.
It's something like that.
It's something like that.
It's Zdenek.
So, can you tell us about Home Credit Philippines? How is this different from traditional layaway programs or even installment sales via credit cards?
Well, I think it's good to first state who we really are. Because I'm not sure if everybody heard of Home Credit. So Home Credit is the biggest company in the world financing mobile phones. We are active in 10 markets. We have huge operations in China. But for example, in USA, we are doing the underwriting of the postpaid mobile phones to Sprint. So that shows expertise in this field. And we came to Philippines 4.5 years ago, and we started to provide loans for the consumer goods. And that time it took us all for 1 hour, 1.5 hour. Our competitors improved loan in like 2 days. Now we are at 15 minutes, and we are still believing that we can make it even faster. Like in countries where we have big data available, where we do it within a minute. But there is a big space. So far, we have 3 million customers in the Philippines who got a microloan from the Home Credit already.
Yeah, who are your main competitors here, and how are you outflanking them?
I'm very humble, but I have to say that the competition in this field is a little bit behind us. So I would say in this one it's still be pawn shops, probably the microfinance companies. But we have a huge advantage that we are not only a credit company, we are like a company that is facilitating shopping. So someone goes to the mall, wants to buy a phone, and has in a pocket 3,000, and in 40 minutes they can leave with a brand new phone that is worth 10 to 15,000. So there is nobody else who is doing something like that.
Yeah. So just to make it clear to everyone, so what they do is when you need to buy something, let's say an appliance or a mobile phone, as you said, what you guys do really well is you are able to process loans within 5 to 10 minutes for a person who walks into let's say a mall and tries to buy a cell phone. Can you tell us how is that possible and how you guys are able to do it?
I would say it's not a big deal to distribute money in 5 minutes. I think what we are really good at is that we have like a system that makes it possible for us also to collect the money back. We are doing it worldwide. We have almost 100 million customers around the world. So what we do is that we slowly build our database and we work, our approval system is based on the data. So if we have 10 million customers in our database, we already can make very quick decisions. So if someone is from a VPO, wants to get a loan, then they probably will have a hard time to get over-the-counter loan from, I'm not looking at anyone, but from us they can get a loan.
Okay, so that kind of quickness would certainly lead to rapid growth in your company. Now, Anthony, we turn to you. How is Gcash doing? Is Mint experiencing the same sort of rapid growth in adoption? I mean, we see Globe CEO Ernest Koo in the ad saying, "Gcash mo na yan." And I remember, dating back to my college days, Globe would come into our campus and try to get people to adopt their technology. And I'm wondering, how is it doing now in terms of adoption?
Well, we are seeing accelerated adoption now because I think the time that Gcash came out in the beginning was probably not like the present moment where everything's coming together. Of course, we didn't have apps which would deliver an experience which compares with today. And more than that, I think it's the use cases as well and the digital platforms. So we're able to see rapid acceleration on app take-up, but also where we make ourselves available on platforms like Facebook Messenger, where we're embedded into social interaction and we're enabling relevant use cases. So anything from receiving your funds either from your employer or through remittance or just through a bank account, and you start integrating more with banks, but then doing everything in your daily life, from buying your load, which is most obvious because this is a very large prepaid market, but to sending money for different reasons, whether it's the worker in the urban center sending to the provinces, or just social payments. You go for lunch and you split the bill. Or to pay utility bills, or now we can book a movie, you can invest in a small money market fund. We started working with all of the financial institutions to actually enable them through our platform to get access to the young population that's willing to embrace technology.
Yeah, so how is Mint doing that? Do you guys see the Philippines as a country that's rapid cash but through mobile payments, or is that a huge challenge that you are facing?
Sure. So we have some things in our favor. We have mobile is ubiquitous. Smartphone penetration is growing. We have a young population, relatively young population, and they're willing to embrace technology. A lot of them are on social media. This is like the Facebook capital of the world. That's all on the positive side, right? On the challenges, we do see onboarding customers onto an app. Because yes, even if you have a smartphone, maybe you don't have the data, you don't download as many apps. We do see challenges in the mindset, as you mentioned. So awareness that you can do things so much more conveniently, cheaper, faster, all of that without taking time out of your regular schedules. And then, of course, getting cash into it, because even if we are an electronic payments company, you still need to get physical cash moving into digital form so that it can then flow. And that's the part where we work with distribution partners, everybody from the banks to 7-Elevens to the remittance centers, pawn shops, the likes, to get cash in so that it can flow. So those are maybe 3 big challenges which we continue to fight against.
Just trying to paint a more vivid picture for our audience. So, like 5 years from now, do you see us more of like the big cities in China, like Shanghai and Beijing, where everyone is using WeChat to pay for everything? Or are we going to be like the US, wherein you try to use Apple Pay, sometimes it works, sometimes it doesn't, and everyone is still using their credit card? What's your take? 5 years.
Well, we bet heavily on the China model, given that Ant Financial Alipay is our local JV partner. We've seen that at close quarters, where really you can do everything in your daily life with a mobile phone. Of course, we are adapting it to the Philippine context, and we are bringing in use cases that are more relevant here. So, for example, if you don't have a unique national identity yet, I know the law is passed, we are bringing in identity solutions that can help enable KYC a lot faster. Where remittance is a big drive here in terms of the contribution to the local economy, we're moving with blockchain-based remittance solutions. But in your daily life, as I said, everything from your receiving of funds through all of your daily needs, we can take care of that. You really don't need to step out with a wallet. And you can really move to your mobile wallet. And that, I think we're seeing early adopters, particularly among the millennials. And I think if you're talking about 5 years from now, it's not just us, it's collectively around this table, TrueMoney, Home Credit, Unionbank, all part of that. Because we see actually collaboration as the path forward and not necessarily collectively irrelevant against cash. So that's where I think we can all educate and move people to far more convenient ways of paying.
Edwin, I turn to you on this because this seems like straight out of a business school textbook, wherein you see all of these startups coming and you see all of this technological changes coming, and you kind of sort of represent the big incumbent here, being working in a bank. I'm wondering, what is your thought process on this?
Well, we went through 3 stages. First, they're not a threat. Second, yes, maybe they're definitely a threat. Into, well, I guess an opportunity. And let me start with not a threat. This market that they're hitting, including my friend here, well, by the way, disclosure, we do lend them money. Corporate. Okay. So we like their money. Not a threat because the banks have never been addressing this market. So we never lent them money, we never really handled their payments. So I guess it's okay for Anthony to take care of them. Okay. But then we realized that all over the world, they start with the mass market, then they start moving up the food chain. I saw a model from Ms. Milton showing start with mass market, then you go retail, then you sort of creep up into people with some money, then you have high net worth individuals all the way to private banking. So the effect, if you don't watch out, is they're going to push us up the food chain. Now you might say there's nothing wrong with that, except that it's a market that gets smaller and smaller. And if all the banks gets pushed up, we're going to have a margin compression wall, right? Then the next stage they say, don't worry, we don't want to be a bank, and we don't want to be a bank. Okay, so
No,
you don't want to be a bank, right? You keep on telling me that. And same with Anthony. Now, he's providing payment, which will replace checks. He's going to lend them money. He's going to have a savings product. What are we talking about? That's the definition of a bank. So I tell that to the Marines. All right. But having said all of that, where does that put us now? This is classic MBA. So we say, okay, things have changed in the last 2 years. Initially, the fintechs were more combative. The stance was, we'll eat your lunch. You watch out, one day we'll eat your lunch. 3 years ago, there was a lot of regulatory arbitrage all over the world. So a lot of these fintechs made money because they escaped regulation. The banks are subjected to, so our costs were higher. the regulators have gotten wind of it, and they're getting smarter. So now the SEC, the central banks are coming into the picture. So it's not that easy for them. So they're finding out that the best way is to partner with the banks who can navigate the regulatory landscape. It's a big enough pie. Now, why are we interested in partnering? Because we learn. If we can be as fast as them, we don't have to surrender the market to them. We can do the same thing that they're doing. We have domain advantage and we can buy the technology. The scariest thing from my point of view are not the tech startups that know nothing about lending. You know, my biggest fear? People like you. People like you who leave your companies because your companies don't want to do the things you want to do. Set up your own fintechs, acquire technology or partner. You are the worst competitors of mine in the future. So think about that.
Yeah, it's interesting that you mentioned partnerships with some of these guys and members of the audience. Because I'm wondering, can you give us your vision? What does banking look like 5 to 10 years from now, and how is it different from how we experience banking now? And so how would things be changing in the near future?
Banking will probably not be the way it is today, where we think consciously which bank we are going to use every time we pay or every time we borrow. You're going to join platforms, and banking will be an embedded experience. So you're going to get your credit, you don't even know which bank, or you forget which bank you listed. So the name of the game is really to join these platforms or build these platforms early. If you miss out, you're going to miss out in a major way.
Are you building anything right now?
Well, you can't build all these platforms together. Many of these platforms are a result of alliances. So it's all about partnering. We cannot possibly own all the platforms. That's crazy, no one can do that. Neither will we be permitted to. So the secret is we need to partner with everyone. Have an open platform. Even when we participate, we don't require it for exclusive. No, we want all other banks to participate. Our only competitive advantage is we want to be the first. So at least, first track.
Yeah, so exciting times ahead,
Different ballgame.
So speaking of big changes, there's another industry that's going to be experiencing big changes in the future, and that is the BPO industry. Karen, can you please tell us what's happening on that front?
So thank you. It's interesting that I'm sitting here with all the banks and money people and I'm BPO, but thank you to CFA for inviting me. We currently, just to give a landscape of the BPO industry, we are, as of end year 2017, our numbers are 1.3 million Filipinos that we employ directly by the companies that are here, both captive. So I represent an association that has all the captives, such as a firm I used to run before, JP Morgan Chase & Company, Wells, P&G, Lufthansa, etc., that have captive operations here, so that's my niche, and the whole BPO space with animation, etc. That's 1.3 million jobs. And the multiplier effect of that is, we are told by McKinsey and Company, is we directly influence hiring another 5 to 6 other jobs. That's your Jollibees, that's the construction people that have to build all the buildings where we're in, etc. So we really have 5 to 6 million employees. Now, you read a lot in the papers that there is going to be disruption in our space. There will be disruption. Just as Edwin spoke, there's disruption everywhere. So they talk about automation, robotics, they talk about the smart agents that are going to replace human interaction quickly. I don't buy into that. If you saw Elon Musk's announcement just a few months ago where he said the problem that he faced with Tesla in production was he automated too much too fast. And I like his quote, humans are underrated. Because humans are underrated. We don't think too highly of humans. We think that robots and chatbots and all these other technology is much better than a human. it will replace the repetitive work that we really don't want to do anyway. But human interaction, it will take quite a bit of time before automation, artificial intelligence, before all of that can take the jobs away, because as we are all working on it, all the different companies are working on it because we do want to see efficiencies, etc. But what we notice is it takes time to train the Watsons of the world and the applications, because humans are not as predictable as we make it out to be when it comes to questions and how they navigate. So there will be disruption, but not as quickly as some of the pundits in the press are saying, tomorrow voice jobs won't be there. I don't subscribe to that.
Yeah. So certainly there is no shortage of prediction as to how artificial intelligence will change the landscape. But to those members of the audience, if you haven't seen it, Google CEO Sundar Pichai made an impressive demonstration of Google Voice. So, as you said, there's like 5 million jobs at stake for the Philippines. Well, of course, certainly not all of them doing voice calls, but basically it's a lot, and we really need the call center industry. So, which jobs in the BPO industry are threatened by this? And so what sort of jobs also will open up, even assuming that some jobs are taken?
So it's a good question. The simple voice jobs or the simple data processing, which you really do not want our college-educated and very skilled workforce to do. I mean, they really didn't finish university with the thought of doing things that are repetitive. That's the work that's going to be automated, right? So instead of a zillion macros that our staff builds, we're going to strengthen the technology with all the RPA tools that are out there, and AI, machine learning, natural language processing, everything that you hear is out there. It will come, and we're welcoming it. We are welcoming it because what we see is there isn't a shortage of work from the first world that is looking for a home in countries like the Philippines. So how are we preparing for it? We're looking at the markets. We're looking at what is the need there. Is it in data science? Is it in other types of capabilities? I'm in healthcare. I work for a healthcare captive. So we are looking at how do we train people up in more in healthcare? How do we train our nurses and our doctors so that they can really work across the globe in a spectrum of healthcare roles that we base in the Philippines. So the industry associations have to work closely with academia, government, so that we skill up our people. Because I know that if we don't invent the products that you all do, but we are probably consumers and customers of many of the companies that are my co-panelists. And believe me, we still see quite an appetite for growth in the Philippines. We're bullish on the Philippines.
And that's awesome because call centers is a major source of income for a lot of Filipinos.
Almost 8% of our GDP is now contributed by the BPO sector. We are second to OFWs. So, at some point, we will probably overtake that. So yes, thank you.
Yeah, so speaking of critical sources of income, another source of income for the average Filipino household is remittances. So it's whether it's foreign remittance coming into the Philippines or domestic remittance where money coming from major cities in the Philippines, such as Manila, is sent to the province to support their families back home. Xavier, can you tell us about what TrueMoney is doing to help the Filipinos in this space?
Sure. Thank you, Luis. Good morning to everyone again. So just a bit of context, right? So TrueMoney as a brand has actually been around for quite some time already. It's a spin-off from the CP group of companies in Thailand, and TrueMoney has been the leading mobile payments platform in Thailand. It's really only been the last few years, so starting 3 years ago, when we've expanded internationally to cover other emerging markets in the region, right? So apart from Thailand, we've expanded and set up operations in Myanmar, Vietnam, Cambodia, Philippines being the youngest operation that we have so far. Thailand is actually very, very different from the Philippines and each of the emerging markets that we cover. Right? Thailand is a very banked market with very easy access in big funds between each account, whether it's between banks or between wallets. Right? Also, credit card penetration is much, much higher as well. But if you look at the emerging markets where we cover, right, the Philippines even being one of them, our mission is really to deliver financial services to the masses, to the unbanked population. But if you look at the demographics of this population, right, these are people who are actually not online today, right? They use a lot of cash. In fact, 100% of their transactions happen in cash. And they do a lot of over-the-counter transactions as well. They are a little bit hesitant to use technology, maybe because of security reasons, because of trust issues, etc.
What percentage is this, sorry, of our labor force, you said?
About 75%, 3 out of 4 working adults in the Philippines. In Cambodia, it's actually much, much higher, about 90%. So how do we deliver financial products to the masses? So we emphasize what we call O2O relationships or experiences, which is online to offline or offline to online. Right? So the first thing that we've actually done is build up a massive network of storefronts, which is what we call TrueMoney centers. So we cover about 79 out of the 81 provinces here in the Philippines today, with more than 16,000 storefronts at the moment. Right? So we digitally enable a lot of these retailers. Could be sari-sari stores, could be one branch, pawn shops, could be drugstores for that matter. Right? So very liquid businesses, and they facilitate payments and offer financial products to the consumer. The consumer, right, we give them the option of transacting using a wallet or in cash. Actually, almost 100% of them still transact using cash. We also provide digital solutions to a business, SMEs, enterprises, etc., to enable them to electronically pay, for example, partners or suppliers, as well as their employees, right? So once those funds get disbursed, the recipient gets to have the option, right, of using it in a wallet or taking it out through our TrueMoney centers. So a lot of online to offline plays is how we're doing it. So we're very, very different from probably a lot of the fintech startups in the space, in that we have a very strong offline capability, right, that still continues to facilitate cash transactions, but at the same time, we also have a very, very strong digital capability in that we help either businesses or some consumer segments in enabling some electronic transactions.
Xavier, I think, so from your experiences in Southeast Asia, I think one of the biggest difference is that the Philippines is made up of 7,000 plus islands.
Right.
So opening up store locations to cater to our fellow Filipinos who are like so far in the branches there. How are you doing that, and how are you solving the problems of the last mile problems?
Right. So we're leveraging a couple of different strategies. Actually, the first strategy that we employ is our technology and platform runs on 2G. Yes, it can run on data and 3G, but in order to reach farther flung areas, right, it has to be 2G. This is still a 2G market, right? If you compare us with Vietnam, for example, Vietnam, more homogeneous in terms of the geographical nature of that country. They have 65,000 cell sites. The Philippines, we have 7,100 islands. We only have less than 20,000 cell sites. So in reality, data is still a problem, right? So we took that into consideration and built our offerings on 2G. So any sari-sari store, for example, in Cagayan or Sultan Kudarat can actually do financial transactions. So that's one. The second strategy that we've employed is, hire local, right? So opening up branches in Palawan, we leverage Palawan-based staff or distributors who really know that market, because each region can also be different culturally and behaviorally from all the other regions.
Good, thank you. So now that we're familiar with the business model of all our panelists, now we turn to a segment where I just ask generic questions that I took from the audience, and hopefully I could get your thoughts on this. So one is, how important is big data, particularly leveraging information that you gather from various sources in order for you to succeed in your business? Zdenek, can I ask you to take this? So basically, how much data analytics is involved in home credit in order to process those loans for you rapidly and ensure that you get paid back? Otherwise, Unionbank might not get its money back.
You mentioned that in China we can do 300,000 loans every day. So there needs to be lots of big data skills in our environment. There are things that you can do on the underwriting, on the origination. And then you need to have credit bureaus, very good structured and unstructured data. But the things that I'm now going to a little bit disturb the BPO industry is when we are going, for example, with our call center, we have about 300,000 seats in our call center, and we record all our calls. And now we are working on having like call to text, and that's a big unstructured data. We are building robots like artificial intelligence to help us identify what is happening during the collection process, during the discussions. And it helps us to improve our strategy so that we are more efficient. We know when to call, what do people say during the call, and by that we will further improve our efficiency. We will not need as many collection operators as we need now, so we will have better customer experience and all of these things, so that we make sure that we earn enough money so that I can pay back the loan to Unionbank. Or we better make it more comfortable to give me the bigger and cheaper loan later.
Certainly, that would be interesting, and he would certainly be hoping that you get to pay him back. Now, in terms of all of these technology creating a winner-take-all business, Anthony, do you think that mobile payments is a winner-take-all business?
No, I don't think even in markets which are far more advanced than us, it's been a winner-take-all. I think, in fact, at this phase, it's good that there are a whole lot of us trying to educate the market and move customer behavior. And ultimately, yes, there will be a few players who will emerge because payments as a business requires huge scale, and you need data to actually monetize at some point, right? So it's not for everyone, but for sure we need more than 1, 2, 3, 4 players. And ultimately it's the partnerships, I think, that will succeed at this point in time, rather than anybody with a mentality that they're going to dominate.
But how critical is it that you grow your user base very fast over the next few years? Is it mission critical, or is it going to result in failure if you don't say like grow 100x every quarter? How's that?
It is very critical because in our business model, payments, as you know, is super low margin and getting lower, right? So the real business model is how you enable others through your platform. If you need to become a platform, then you need scale and you need it quick because everybody's trying to be the same thing, right? So that's where I see the need to rapidly accelerate growth as being very important.
Okay, so in terms of what we need from our government to succeed, right? So in terms of infrastructure improvement, what do we need from the government in order to create a more fertile ground to grow these fintech initiatives? Karen, can you take this? What do you need from our government?
So no ding on any of the telcos here, but we do need a third telco. We do need, we just talked about, Xavier, the pitiful number of cell sites that we have in the Philippines. We all know what our service is like, whether it's voice or it's data. So first we need to be able to connect the country. We need to be able to connect the country even if we still have quite a number of third-level municipalities and barangays that do not have electrification. We still need to be able to connect digitally. The other thing that we also need from our government is, and we now have the DICT. So what's great is our industry lobbied for the creation of the Department of Information and Communication and Technology, DICT. The country needs a CIO. Every organization has a CIO to be able to understand what's coming down our way, how can they enable, whether it's education, it's e-government, it's e-payment, so that if we pay electronically to all the different government agencies, that should make a big dent in corruption, right? If everything is done electronically. So I think that the role of DICT, what government needs to do is to help and work with DICT, work with our educational sector, and work just collaboratively so that we can build not only the technological infrastructure, but also the people infrastructure so that schools have the capabilities for digital training, people have the way of learning digitally, whether it's Coursera, but they can do it from their homes, so that our 105 million Filipinos can keep up because all the content is there. The content is there whether in whatever format. It's enabling that connectivity. And that's what our government, I believe, first focus is to get the infrastructure right.
How about in terms of growing TrueMoney, what would be helpful from the government in order to grow your number of users for TrueMoney?
Well, first of all, it's definitely telco infrastructure. So we need data and bandwidth, right? Because even if we offer our experiences today via 2G, right, it still provides data, 3G, 4G. It still provide a much broader set and richer set of experiences to the consumer. Right? Second is national ID. I think it's great that the government has already passed the law. If you look at comparable markets and successful mobile money implementations, M-Pesa in Kenya, Wing in Cambodia, I mean, all these were also based on having a national ID system. And then the other one's probably more seamless ability to move funds from one account to another, which I think the central bank is working on today.
Now in terms of what the government stands to gain from all of these technological improvements and maybe from the benefits of being cashless, Edwin, what do you think is the biggest upside of all of these technological improvements from the perspective of the government? Is it like, for example, less money laundering, less corruption, less taxation? What do you think?
Efficiency, transparency.
Efficiency and transparency.
Lower the cost of doing business. But to answer, what are the three things, let me just give you 1 minute to say what my bucket lists are. Sure. One, government adopts a digital-first policy. Government is the biggest collector and disburser of funds. If they went to a digital-first policy, we will solve the 20% digital cashless society in 1 year. Second, new rules on cryptocurrency. I think PSP is on the way and SEC2. Third, it might help if the BSP actually issues a central bank cryptocurrency. And I heard them thinking about it. Ma'am, I urge you to seriously consider it. Because that will send a signal that we're very progressive, and this will demystify cryptos.
Okay, so Anthony, how far are we from being so cashless and so efficient in terms of accepting payment electronically that we can actually go to a palengke or a market, wet market, and pay our regular vegetable vendor using our mobile phone?
So let me answer it this way. The capability exists. In fact, we have enabled a couple of palenques as well. But I think a few things need to come together for us to really make this work seamlessly. And that's why we've had a lot of discussions around, do we go to the palenque, do we go to the provinces, do we enable that? Or do we go where people are willing to embrace technology quicker, given everything else that we need to solve for? Right? And that's where we focused on starting with malls, for example. Right? And of course, Ayala malls, given that Ayala is a shareholder, as well as all of because this is a mall-centric culture. On a given day, on a good day, let's say 500,000 people walk into Glorieta Mall in Makati, right? If we can enable all of them with QR payments from small merchant to large merchant, right? That's a concentration where you have enough people going through, you can set up convenient cash-in, and you can see the use case, and therefore it's easy to educate. Those people then tend to influence the households, and those people then tend to influence the relatives out of the provinces. So we see this as a path to the underserved, as opposed to getting directly to the underserved, where, as Xavier mentioned, you really have to set up all of those building blocks, right? So, can you pay in a palenque today? Yes. But is it going to be pervasive? There's a path to it.
So it's certainly like a chicken and egg. So the more people using it, the more network effects comes in. And, okay, so that's really all the time we have. But before we end, okay, let's just go around the table real quick. One sentence answer. Okay, let's start with me, just so I don't surprise everyone. So what excites you the most when it comes to all of these technological improvements? So let's go counterclockwise, starting with me. For me personally, what excites me the most is this could potentially result in higher tax effort ratio for the Philippines. So that's tax collections divided by our GDP.
For me, what excites me and gets me into work every day is we can actually enable a better life of convenience, of a more affordable, quicker, everything that we suffer today, and we can do that for a very large cross-section of the population that hasn't enjoyed that in the past.
Yeah, I mean, one sentence, what excites me is leveraging technology in the right way to change people's lives for the better. That's it.
Now, what excites me and has always excited me is employment opportunities for Filipinos. And I believe that with the right technology, we can enable even more jobs to come to the country, whether it's BPO, which is outward facing, or domestic jobs, because it will just give rise to just that Filipino ingenuity that will bring much more creative products to the market.
As a CEO, if the banking industry doesn't change, if the business models don't change, I'll be way retired before we even could think of being a top 3 bank. But if the business model changes, maybe we have a crack at it.
I would say what excites me is that technology is enabling financial inclusion to the masses and ability to provide credit to the masses that is not available now. On the other hand, what worries me is if technology is used in the wrong way, it might be a big risk, like all these peer-to-peer lending platforms, also space for fraud. We have seen in China big steps against those not regulated lenders. So I think we need to have also a good regulator that keeps an eye on the financial services industry. But it's a big opportunity for those who are not financially included now.
All right. So yeah, that wraps it up. Thank you all very much.
Our speakers for that very engaging discussion. It seems to me, personally, from listening to everybody talk, the digital economy, the line between the digital economy and traditional economy is now becoming really blurred. And this is really the direction to the future. So at this point, we're opening the floor to questions from our audience members. 10 minutes perhaps for short Q&A. Again, kindly post your questions through the app so that our moderator can see it and address our guests.
So let's see which one has the most number of likes. Okay, this one goes to home credit. If you can disclose for the PH market, the Philippine market, what is your average interest rate charged? Default rate and then the return capital.
And the mic is off. I switch it off as well.
Well, I can see that for the 50% of our 56% of our loans, it's zero because we are providing the gadget loans and the producers are providing us subsidy. So they are spending efficiently their marketing money. Then we are getting very close when it comes to the cash loans to the credit card industry. So I would say slightly less than 1% per month. What is the credit card industry average? So some people can get even below 7% a month. So we get even cheaper than credit cards sometimes.
Thank you. So Eric Sanders has a question. This is a GCash experience from his friend. So first, the cashier checks his phone to confirm whether or not I have paid. And then he inputs the confirmation code into the POS system. With one retailer, it was a physical logbook. And then he prints the receipt and makes me sign the receipt. The cashier then keeps the receipt. So it's like 27 steps. So what is the strategy of GCash to truly become the most convenient payment avenue?
That's a great question. I don't know where it came from.
Eric.
So some of those steps that you outlined are not required by GCash. It is actually a transition for the merchant in terms of their own processes, right? Now, we started with probably the simplest but the lowest cost solution for QR-based payments, which is purely a sticker. So it takes away the device, it takes away the investment, you can transfer the benefit back to the merchant, right? That's what we started, and we proliferated. We've got more than 13,000 merchants in about 9 months. That process requires some confirmation because a sticker is not enough to send a message, right? That's where we enabled the phone as a confirmation, but the writing into the logbook, etc., is really layers that certain merchants add on. But what's the solution? For a select set of merchants who actually are willing to integrate with their point of sale, we are happy to do that directly on the merchant software, so not even adding a new, we can just work with a scanner, which is used to scan for their inventory, and we can enable payments there itself. The other alternative is we're bringing in really low-cost devices, which improve that experience significantly, whereas as opposed to the consumer scanning the QR code of the merchant, it's the merchant scanning the QR code, which has more information in the smartphone of the consumer. And that has a very quick integration with the point of sale. It doesn't require long development cycle. It's almost plug and play. So we've got a range of solutions. We start with the lowest cost. It works. It builds adoption. It's one step more because you need to see a confirmation, but it's still superior to cash because you don't need to fork out the change. You can actually get the line to move on quicker. And then we progress depending on the sophistication level of the merchant.
Thank you. Now, next question. Can somebody please explain this paradox? How come the Filipinos are very active in social media? We're always online, always fiddling with our phones, always liking a friend's post. However, when it comes to digital shopping, online shopping, or digital banking, we are lagging behind. What is happening here? Anyone?
Yeah, first up. So if you look at the Filipino people, very, very digital savvy, right? But if you focus on what they are doing online, it's actually more Facebook, more Viber, so messaging. Those services are completely different from financial or payment-related transactions, where you actually need to engender trust before someone can very actively start using an e-commerce site or a payment platform, right? There is a huge gap between those two types of online services. So I think it's the trust factor.
Trust factor.
And I'll have to say I'm guilty because if there's an option and I go online and it says pay digitally or write a check and deposit, because you know that a number of our websites and our communities that sell product allow you to pay at any of the banks, I always choose the latter, which is pay at the bank because I get the deposit receipt. I do have something that I can hold on to, so I'm not a digital native, I'm too old for that, but I will say that I know how to use Facebook and Instagram, but I still will do things the old-fashioned way.
Okay, so thank you. Okay, last question. So some of the models of other startups and other disruptors is build the technology first, then regulate later, worry about regulation later. And then, so which one is better? You build technology first, innovate first, and then regulate, or worry about regulation and then you innovate? Which one is, how do you approach this?
Depends on which particular area. There's no one solution there. But what we're finding out is most of the startups now have difficulty navigating the regulations, and that's where partnership with a bank often helps. The second problem is scaling up. They may have a great idea, but they can't scale up because no one will lend them money based on cash flow that does not exist. So you almost really need angel investing to be able to ramp up. So those are the two things that hinder most of the great ideas that I've seen.
I think in the Philippines, at least, we've seen that the BSP is particularly progressive. In fact, in terms of allowing new trial. Way back before, and I don't know whether the Deputy Governor would have mentioned it earlier, way before regulatory sandboxes became popular, they have had this test and learn approach. So I think you solve a problem first through technology, not develop technology. You solve a problem first, and as long as it's addressing the country's problem of inclusion, I think we do have quite a supportive regulator that helps us along the way. Right? So, of course, we can complain about where it could be better, but I think so far we found that our engagement with them has actually been quite productive.
So our financial regulators have been very supportive of these initiatives.
Can I have 30 seconds to comment on this cash? Sure. Actually, I think the basic problem is that sometimes we're proceeding with the assumption that people find cash inconvenient. A large portion of people actually just enjoy having cash in their wallet, and that's a reality. What you need are uses where they can't use physical cash. If you have most of that, a lot of that, people will migrate. So such as buying on online shops and all that. And the second one is, maybe your killer app should be credit. Because at the end, if they use electronic and you tell them, if you do that, I can provide you with cheaper credit, like these guys over here, perhaps they might go digital.
All right, so thank you very much. With that, we end our session. Thank you all. Thank you all for being here. Enjoy lunch.
Thank you very much to our panelists, Mr. Jankovsky, Mr. Bautista, Ms. Batungbakal, Mr. Marzan, Mr. Thomas. Thank you once again for your time. And to our moderator, Mr. Esquivas, thank you for that. May we request everyone to please remain on the stage for the awarding of plaques and tokens. So may we please have on stage Ms. Christina Arceo, President of CFA Society Philippines, and Mr. Erwin Abante, Trustee and Vice President for Industry Relations of CFA Society Philippines, for the awarding.